Good day, ladies and gentlemen. In this video, I'll be teaching you something about order block that you can't find anywhere else on the internet. Okay, so I'm giving you some kind of secrets here. Okay, it's more like giving you extra confluence to order blocks that actually work. Okay, have you seen a situation whereby you wait for a trade, at an order block? Maybe it's a bullish order block, so you had order candles pushing in the upwards direction. Okay, so you're waiting at this level for price to get back in order for you to take a buy trade, right? Something like this. But instead of price getting to the level of the order block, let's say this is the order block right here, then you had a big push. You're waiting at this level. Instead of price getting there, price does something like this, then pushes upwards, or price gets there and disrespects it. So today I'll be giving you something you need to be looking out for in order to reduce the probability of the order block failing. Okay, so the very first thing you need to look out for is your order block. You already know, most times we take our order block as the last bearish candle before bullish momentum move, or the last bullish candle before bearish momentum move. So this particular candle, we need to ensure that the candle takes out the liquidity of the candle before it. So for example, this is a good example right here. You would notice that this is the last candle before this bullish impulsive move. This is the last bearish candle. But if you observe, you would notice that this particular bearish candle, it did not take out the liquidity of the candle before it. Okay, so look at the candle before it. It did not take out the liquidity. It didn't go below it. All right, so what that means is, if you're using this candle on its own as your order block, if you're using this candle as your order block, there are two probabilities. It's either price is not going to get here, or price is going to come here and disrespect it. And as you can see, price did not tap into the order block. Price just kept going in the upwards direction, and when it finally came down, let's see what happened. It disrespected it and pushed to the downside, eating any stop loss that you have. Okay, so I have several examples for you. Okay, so for your order block to be high probability, it has to take out the liquidity of the candle before it. Okay, so look at this right here. This is a good one. This is a good order block. You can see by its side, the candle before it, its liquidity was taken by this candle, which I want to use as my order block. So I'll simply mark out the high and the low of that candle like this. This is the high right here, and you have the low right here. So what do you see happening? Price came back into the order block and gave us an opportunity to buy. Okay, hope you can see that. So price pushed higher and higher from there. Okay, so that shows that the order block actually is better than the previous one. So that's something you need to just use as an extra confluence. Okay, that does not mean that sometimes these other blocks that do not sweep the liquidity of the previous candle before it's not going to work. Okay, it's going to, sometimes it works actually, but it's like a higher probability setup if it actually takes the liquidity of the previous candle. Okay, if it does not take the liquidity of the previous candle, it could still work, but the probability of it working is now a little bit lower. That's just the idea. Hope you understand what I'm saying. I'm not saying it's not going to work at all, but you can just use that as an extra confluence. You have done your analysis, you want to enter at an order block, you can just check this order block you want to use, this single candle you want to use. The candle before it, did it take the liquidity? If it did take the liquidity, then that's like an extra confluence. It should give you more confidence that yes, it will most probably hold. Okay, so I have another example right here. Look at this. Someone might come and use this as an order block. Okay, but if you look very well, you would notice that it did not take the liquidity of the candle before it. Excuse me, it did not take the liquidity of the candle before it, right? Yeah, so if you're using this as your order block, the probability of it working out is very low, even though it has other things that could qualify it as a good order block, like a fair value gap, which is an imbalance, is sitting right here just above it. Okay, so you can see fair value gap right here, but what do you see happening? Price disrespected it completely and used it as a breaker block, so price tapped in and pushed down. Okay, so it's just something you need to look out for. This is a good order block right here. You would notice that it took out the liquidity. This order block here took out the liquidity of the candle before it, so it's a higher probability order block compared to other order blocks that don't take out liquidity. So I just need to double this. So it has other criteria that makes a good order block. There's imbalance right here, fair value gap, okay, which is going to attract price. So let's see what played out. Price just kept pushing up, but at some point it's going to return to it. So price returned to it right here. You can see price going into our order block region. Definitely you will put your stop loss a few pips below your order block. Okay, so price did not hit the stop loss, instead it pushed out from there. Okay, so you can see price pushed out from that order block, so you would have made money with this order block. All right, so basically that's just how it works. I think I have one more example to show you. Let me zoom out a bit. Okay, so this is one more example. You can see right here there's an aggressive push to the downside, telling us that sellers are around this region. So we want to mark out our order block. We already can see a nice imbalance right here, which is a fair value gap. Okay, so marking out the order block, there is nothing fancy about marking out an order block. You just look at the last bullish candle before the bearish move. But I'm just giving you an extra tip which you can use as extra confluence to give you more confidence to enter a trade or reduce your entry size based on your observation. So what you have here, you can see that the liquidity of this candle was swept by this. So this one moved above this candle to its left. Okay, so this is the higher probability order block. I'm going to be taking a trade from here with confidence. Okay, so I want to mark out the order block from here to here. Okay, so let me delete this. Okay, so let's see what happened when price returned to that level. With I can see three lines. Let me delete one so it doesn't cause confusion. Okay, so I just need two lines for my order block. Is that it? Okay, good. So I don't want confusion. I want to see when price is going to return to that order block. Okay, so price tapped into the order block right here, and you can see what happened. Absolute respect. Price pushed to the downside, and this is where price is currently. I'm recording this video on Sunday. Okay, I'm recording this video on Sunday, so this is current price action. I think today is the third day of November 2024. So this is current price action. So if you knew about this, you would have taken this trade. Okay, so basically that's just what I wanted to teach you guys today. Hope you learned something. If you got any value from the video, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.